Welcome to today's podcast, where we're going to explore the life and investment philosophy of Warren Buffett. There's a lot to cover, so let's dive in. John, why don't you start us off by talking about Buffett's early years?
Sure, Alice. From a young age, Warren Buffett had this incredible fascination with numbers and making money. He would count license plates and memorize population stats. Seriously, a numbers kid. He even had little ventures, like selling chewing gum and Coke bottles. But the real turning point came when he discovered Benjamin Graham at Columbia University. Graham's value investing approach, buying undervalued stocks, became Buffett's core strategy.
Exactly. And you can really see how those early experiences shaped his mindset. I love the story of how he bought his first stock at age 11. Can you imagine? I wasn't even thinking about stocks back then. But what sets Buffett apart is his patience. His favorite holding period is forever. He's all about the long game.
That's right. His strategy revolves around intrinsic value. He looks for companies trading below their true worth and then holds on to them for the long term. It's not about quick gains. It's about finding businesses with strong fundamentals and watching them grow. He often talks about moats, or durable competitive advantages that protect companies from competition.
Yeah, those moats are key. He's very selective and avoids companies he doesn't understand. I think that's what makes him stand out. He's not swayed by trends. He sticks to what he knows. That brings me to one of my favorite Buffett quotes. Price is what you pay, value is what you get. That's pure Buffett wisdom.
Absolutely. And his deep understanding of business fundamentals is another strength. He spends hours reading financial reports, analyzing companies from the inside out. He's not just looking at stock prices. He's assessing the entire ecosystem, from management quality to market position.
It's incredible how much time he invests in understanding businesses. And once he does, he's not shy about making acquisitions. But he's selective. He doesn't just buy anything. He focuses on companies with strong models and often keeps existing management in place. It's more like forming partnerships than just making a purchase.
Exactly. His acquisitions are legendary. Geico, See's Candies, Nebraska Furniture Mart. These are all companies with strong fundamentals and trusted management. He's not a micromanager. He lets the companies run while keeping an eye on the big picture.
And what about his personal approach? Buffett is known for his emphasis on character and integrity. He values honesty, not just in business but in life. It's no wonder he's built such long-term trust with his shareholders.
Right. His communication is so transparent. In fact, his annual letters to shareholders have become required reading for anyone interested in business. They're simple, candid, and packed with insight. It's refreshing, especially in a world where corporate transparency isn't always the norm.
And let's not forget his personal lifestyle. Despite being one of the richest people in the world, he still lives in the same house he bought in 1958 and has pledged to give most of his wealth to philanthropy. That's humility for you.
Yeah, practices what he preaches. And speaking of humility, Buffett's contrarian approach to the stock market is famous. He said, "Be fearful when others are greedy and greedy when others are fearful." He stays calm when others panic, and that's served him incredibly well.
That's such a powerful mindset. He doesn't follow the herd, and he avoids making emotional decisions. Buffett emphasizes patience and discipline in investing, two things that are often in short supply in today's fast-paced market.
Exactly. He knows that markets are driven by fear and greed. He's all about maintaining emotional discipline, and that's where the margin of safety concept comes in. Investing with a buffer, so even if things don't go perfectly, you're still protected.
And it's worked wonders for Berkshire Hathaway. Buffett transformed it from a struggling textile company into a diversified conglomerate. His leadership, combined with his ability to spot value, turned Berkshire into a powerhouse with interests in insurance, energy, railroads, and more.
The evolution of Berkshire is a masterclass in capital allocation. From acquiring National Indemnity in 1967 to investing in companies like Apple in recent years, he's constantly looking for value. And his partnership with Charlie Munger has been critical to that.
Munger really broadened Buffett's perspective. He encouraged him to focus not just on undervalued stocks, but also on high-quality businesses, what they call wonderful businesses at fair prices. Their partnership is one of the most enduring and successful in business history.
They've always emphasized rational thinking and avoided the cognitive biases that lead so many investors astray. And their letters to shareholders reflect that. So much wisdom delivered in such a straightforward way.
That's something I admire, how accessible Buffett makes complex financial concepts, and his critiques of Wall Street practices, like excessive fees and short-term thinking, really resonate with me. He's not a fan of financial engineering or the way some executives prioritize short-term gains over long-term value.
Absolutely. His skepticism of Wall Street is well documented. He believes in simplicity and staying grounded in reality, which is why he's so wary of trends like excessive executive compensation or empire building for its own sake.
Buffett's focus on long-term value and ethical business practices is why he's such a respected figure, not just in finance but in life. It's clear that his wisdom goes far beyond making money. It's about doing things the right way.
Couldn't agree more. His principles are timeless, and even though the market and the world keep changing, his approach continues to prove effective.
And with that, we're out of time for today. But there's so much more to learn from Warren Buffett. I hope this has given our listeners a good glimpse into his life and philosophy.
Thanks for joining us, everyone. We'll be back next time to dive into more fascinating topics. Until then, take a page out of Buffett's book, be patient, stay disciplined, and focus on the long game.
See you next time.